Hi, this is Brian Neal with TradeToBeFree.com, and today I want to go over some of the recent trades that we've had. We've had quite a few big winners in the past few weeks, including ABMD and Sedge here, LGND, and a few others too that made really big moves within a week or so. TTD and AAXN were found using the earnings eruption score, so I'm going to talk a little about that, but I want to focus on how we trade and why we trade the way we do, and talk about swing trading these big chart patterns. And I'm going to show you how to find these really big setups that can lead to a trophy trade. We're not looking for minnows here. We're not looking for small, 2%, 4% winners or 0.5% winners, 0.5% winners during the day. We're looking for the big trades, and these come out of really big chart patterns on a daily chart. So we're swing trading these big chart patterns here on the site, and on my site I've got a list of all the top trading setups I'm looking at, and SCDG was in one of the strongest chart patterns in the market, and this is a bull flag pattern, and I've got some more videos on the bull flag pattern, and you can look at that and see exactly how we generally trade this setup. But you can see on the chart here how the stock made a really big move into this bull flag and this flag portion of the pattern here. So from here to the top here, we have a near 100% move within 10 weeks. Okay, and that's what we're looking for. We're looking for a really big move initially into the flag portion of the pattern, and then a narrow consolidation as time goes on, and then signs that the price is lifting out of that pattern ahead of a catalyst. And in this case, Sedge was one of the top growth stocks in the market, had very strong earnings growth that were growing for a few years. The stock is in a very strong long-term uptrend. When you click on the chart on the site, you can see the most recent chart here. And if you go back, you can see a long-term uptrend leading into the pattern. So you can see from 2017 up to the point where it formed the bull flag pattern, we can see a very strong move over the past year or two. Okay, so the first thing we want to look for is a very strong long-term uptrend. Okay, that tells us that the company is creating value over time. Most stocks under $20 have a declining chart or horizontal chart over the long term. And what we're looking for on the site is looking for a stock that can really make a big move over the short term and the long term. And stocks that have made those kind of moves consistently over the long term have a stronger chance of doing it in the future. So stocks under $20 will tend to stay under $20 for the long term, and stocks over $20 that are in this long-term uptrend have a better chance, much better chance of making a big move higher. And if you're swing trading, especially if you work full time and you're looking for a swing trade in a longer time frame, if you want to hold the stock for a few days to a few weeks or a few months, you want to have that long-term uptrend firmly in place. So we're looking for stocks that are above the 200-day moving average, that are in that long-term uptrend, that have the fundamentals that are rapidly improving, that can support the higher price. In this case, we have a stock that grew their earnings and sales at low mid 20% range, I believe it was, for a few years, and recently they've had accelerating growth, and that's ideal. We want to see the growth picking up after a period where they grew the sales and earnings at a very strong clip. Okay, so once we have that, once we have a top growth stock, or at least a company that is undervalued with big earnings beats and sharply rising estimates, as long as we have that type of stock, and we have a big move into this chart pattern here, this bull flag pattern, okay, then we're looking for the entry point, and ideally a catalyst either in the recent past or in the upcoming in the days or weeks ahead, as a price is breaking out of this chart pattern. In this case, the catalyst was an earnings release coming up in the days ahead, and what we noticed was that nearly all stocks in the market were beating estimates. This stock tends to beat estimates by a wide margin each quarter, and it done so in the past, and that makes it more likely that it'll do so in the future if those estimates are steady or rising into the release. Okay, so So Sag had all the factors we look for. And again, if you want a big trade, a trophy trade, this is the kind of setup that you want. Okay, and then what we look for out of this chart pattern, this bull flag, okay, is either a straight horizontal move, a flag, rectangular shaped pattern. Okay, in this case, we have more of a descending wedge. The short-term downtrend here that's confirmed with 3 touches. So if we draw a line connecting these highs in the consolidation, okay, we touched that high, that line more than 2 times. Okay, and that confirms this short-term downtrend through here. And then we see the price lifting out of this consolidation here and breaking that short-term downtrend. Okay, so the time we featured it, that already occurred, and we saw a strong confirmation of that ahead of the earnings release. So that was the sign right there that the price had a good chance of breaking out of this either ahead of the release or after the earnings release. And in this case, the stock had a very strong history of beating estimates by a wide margin. That's key. Okay, so what we did was we went ahead and featured it as it was breaking out of this short-term downtrend. Okay, the entry point was just above that prior day's high. Okay, and a couple days later, the company beat estimates and soared higher out of this bull flag pattern and made a, from the entry point, it made a, I think 25% move higher within just a few days. Okay, so that's the ideal, really the ideal trading setup that we look for. You couldn't ask for much more. You have a long-term uptrend. You've got a stock with very strong growth and accelerating growth. You've got that bull flag pattern. It's tough to beat that. Okay, and with that catalyst coming up and that history of beating estimates with other companies in the same industry beating estimates by a wide margin too, that's a culmination of factors that's very good. And you want to catch these around the breakout point and then just let them ride higher for a few days to a few weeks. And in this case, the stock's already hit the first target, which is around $65. Okay, and then we've got another target up here in the 70s. Now, one thing you can do with this is after it breaks a daily candle, because it made such a big move initially, you could take some more off after breaking that daily candle and this bearish candlestick pattern forming up here where you've got the reverse hammer here and then a break below that day's candle the next day. That could be a point where you could take some off. And then you could decide at that point whether you want to hold this with your remaining shares and go ahead and wait for that secondary move higher, which we'll probably get in the days or the weeks ahead. And with the big earnings beat, with rising estimates, and with all that strength here, the stock is liable to come back, pull back to the 10 or 20 day moving average, okay, and then have some signs that it's rebounding strongly off that moving average, or it may come back all the way to here too, and start to move off there that's really strong, and you can just sort of wait for that to transpire and just hold the stock and stop it around your entry point or just below your entry point. Okay, so in this case, in the newsletter, that would be right below this low here. You can raise that stop and just give it plenty of room, as it has a good chance of making that second wave higher. Okay, so that's a good example of swing trading the chart patterns like we do on our site. We saw ABMD made a similar kind of move after being featured on the site. We've seen a few others. We have Trade Desk too. We mentioned this on the site the Thursday before the big move here. And what we said was that it had a big earnings beat and was clearing this consolidation. Okay, and if the price went above the pre-market highs, we would jump in, and we caught that for a real nice day trade. We bought it here around 69 and sold our final shares here in the low 80s, and it's actually formed a pretty strong flag pattern here, and it broke out on Friday, so it's continuing to go higher. And you might want to play that momentum to the upside. If it breaks the prior day's high on Monday, you could play that with a real tight stop loss. Stop it at your entry point and just see if it makes a move to 100 now, or if it if it pulls back, you can take it off around your entry point if it pulls back. Maybe take some off at a 4 to 10% profit if it makes that move next week. But this one's due to pull back, and this may form a bull flag pattern. Okay, with this kind of accelerating growth, I think in the key area that where most of the growth will come in the years ahead, connected TV, the stock had over 2,000% growth in that area, and that portion of the revenue stream, and that's a big future growth driver for them. And with that kind of acceleration of growth, plus the overall revenue growth for all the different segments of their business was really strong as well. So this is a very unique stock and very strong accelerating growth. They're making money. They have the earnings already, even though it's a recent IPO, and things are really going very strongly for them right now in their business. And so we want to watch this to see if it forms a tight consolidation in the days or weeks ahead. And if it does and breaks out again, we can go for another bull flag breakout. But it has to get up into the high 80s, low 90s first, and then form that narrow consolidation. And again, we have another video on our site about bull flag patterns. But we'll be watching this closely. There's several patterns I'm looking for on this stock. Okay, so in that next consolidation, I'll be watching it closely. And if I see a good technical entry point and signs that it's going to make that next move higher, and that's starting, then we'll go ahead and feature it in the alerts, and probably get another good trade here, and another good trade that could move 15-20% within a few days. Okay, guys, that's an update. Watching TDD for that next good entry point. We're also watching a lot of other stocks. A lot of companies beat by a wide margin this past quarter. We're seeing a lot of companies with accelerating growth and all the key fundamental criteria it takes to support a higher price. So if you're swing trading these chart patterns, we look for them all the time on the site and feature them to subscribers. So you can go to the site and you can get a 3-week free trial by just entering your name and email address. We also have some great videos on our YouTube channel to help find these on your own. And we also have some great video courses. We use the earnings eruptions strategy to find TTD before it made that 25% move higher within 2-3 days or so. I think 3 or 4 days. The entry point was around $68, $69, and right now it's up at $85 after a week. So those are the kind of trading setups we look for. The biggest day trading setups in the market, and also the best short-term swing trading setups in the market on top stocks that can hold these values. You notice that stocks that are trading under $20 and the penny stocks, they may make a big move for the short term, but they can turn over very, very quickly and go down 10-20% or more in a heartbeat. So these stocks tend to hold their value more when they have the real sales growth and earnings growth to support the higher price. They're no longer pure speculation. They have the results. They have the earnings and sales growth. And this one has a PEG ratio of, I think, still less than 2 or 1.5, somewhere between 1.5 or so, 1.7, something like that, I believe. But you can check that out on Yahoo Finance or any other investor site and find out what that PEG ratio is. But this could go to a 2 PEG very quickly, and right now it could go to $100 to $120 in the weeks or months ahead after the next consolidation. There's a chance it may make that move quickly, but it's probably going to pull back first, and it may require another earnings release, and it may pull back, not set up a good entry point, and we may just catch this ahead of the next earnings release out of a double bottom pattern, or again it may form that bull flag pattern and offer a really good breakout point, a good technical entry point. So if we chase this stock at this point, there's a good chance it could come back pretty hard. So we want to catch the really good entry points using those chart patterns and find those really good entry points and play those with a tight stop loss at this point. Okay? Looking also at other steps too. I want to mention this too because, of course, they don't always work out, but we had SGH was another chart pattern we played here, and this is a long flag, short-term downtrend here back to an uptrend support, and this uptrend support goes back further than this if you look at a longer-term chart. But we were playing this long flag, or the short-term downtrend as I call it, and looking for a breakout out of that short-term downtrend within that stronger long-term uptrend on a stock with rapidly improving fundamentals. And we got that breakout here, and we played that. Went up 15% very quickly. We took some off there. Okay, we also had this candlestick pattern, bullish candlestick pattern here off this 10-day moving average, and we actually jumped in with another trade, but that's turning over quickly now. So a bad reaction to Applied Materials earnings report on Friday, and we actually missed the stop loss point on that for the secondary position. Okay, so should have gotten out right here below the prior low in that pattern, but we'll take some off probably on Monday. But keep the remainder of our position through or until it goes below this low here. Again, we took profits up here as well. So, we'll see how this plays out. It may be a break-even trade the way we're playing it, but it has a good chance of bouncing off that long-term uptrend support, offering another bullish candlestick pattern off that, and then basically playing this pullback after the breaking of the chart pattern. Okay, the breakout of the chart pattern here. You often get that pullback to test that entry point, and then a secondary move from that point. Okay, so we're watching that closely and see if we can, see if we get another good entry point, and then play that, and then we could very well see a move back to 47.50, and then a breakout of that back to the highs ahead of the earnings release coming up in early June. So that's another one to watch for a good secondary entry point. And again, we'll be watching that on the alerts and keeping you updated in the weekly and daily alert. All right, thanks for listening, guys. Best luck in your trading, and find those big swing trading chart patterns, those big chart patterns on top growth stocks and companies beating estimates with rising future expectations that have a reasonable valuation in a long-term uptrend, and you'll find a lot of good trading setups that make big moves, and you can catch that trophy trade, that big trade like we caught recently on those other stocks.